Guys, good evening from here. So I want to touch this Euro USD concerning the previous video I made on Euro USD based on this 3 month fair value gap that we have right here, and you can actually see the price is still respecting that fair value gap. The fair value gap is still holding the price, and it's just there. All right, it's just there. So we're trying to figure out if the fair value gap will continue to push the price lower, or the high impact news will trade out of it. Okay, so now the main analysis that I have right here is that price is at a premium, all right, for the range high and low at which it is inside. I wish it is inside. I wish it is that English. I wish we are dealing with. All right. All right, so we have the range high. I'll make that 14, put at the top. We are dealing inside the swing points, and we have the range low. Alright, so this makes you have a clear understanding. Alright, so we are inside this high and this low. Alright, price trades into equilibrium. I believe that's equilibrium. Price trades down into discounts. We should be around 23 Fibonacci level, and now we are in a premium price. So if I use Fibonacci to mark out this high and this low, you can actually see exactly like I said. We trade into the 50, the equilibrium pricing, trade down to the discount, and then finally trade higher, trade into premium pricing. Alright, so everything above 50% is a premium, and anything below 50% is a discount. Alright, so in that premium pricing, we have this 3 months fair value gap that is present right there, and then we also do have this liquidity. That's an area of sell side liquidity pool because of this high and this high. All right, so that is this sorry, that is a buy side liquidity pool. So we have the 3 months candle trade higher, and we took that liquidity. So this is the first quarter, this is the second quarter. Now pay attention on which quarter we maintain that high of the A possibly, and we see our directional bias. So we can now go down to our monthly time frame. This is what we have right here. This is the buy side liquidity pool, and you should also know that this was a range. All right, I've explained this multiple times. This is a range. And let me take this labeling here. So we have that area of support, and also we have that area of resistance. So guys, I do prefer using the body of the candle instead of the wick. Alright, because the body of the candle is where the trading occurs. That is where the volume of the trading occurred, but the wick is something that is used to sweep liquidity, right? To sweep those that are in support and resistance, to sweep a high and the low, to sweep an open on the close. All right, so if you use the line chart, you can actually see that the wick is not visible, only the body, because that is where the real trading occurs. That is the open price and the closing price. Okay, so and if you notice, it is always the body that reacts to that support and resistance. All right, then the wicks is used to take those liquidity. All right, so we trade lower. The first thing we took was the sell side liquidity pool, right? Took that liquidity, purge it, and now we trade higher to be drawn to what? The resistance level, the buy side liquidity pool that we have on this high. Okay, and then we dived into the 3 months favorable gap that we have right there. So we are now going to focus on this high and this low. This is previous month, although the month is already ending, right? Okay. Then we can now go down to the weekly time frame, and I forgot to show you something. The new range that is now formed is this low and the high right there. That is now the range. Alright, the swing points, the swing points that we'll be dealing with. Alright, this low and this high right there. So we have our discount right here. So we can now run down to the weekly time frame. This right here is the weekly time frame. The weekly time frame. You remember that discount I showed from this using the Fibonacci? You can actually see is a favorable gap right there. Alright, so now we have the weekly time frame. This high was taken, or responsible to take the high. What responsible to take the high rests on this fair value gap, on that sell side inefficiency. Okay, so now price trades into it, and now we're trying to see if it wants to go higher for this high, or is it going to create a fail high. Okay, so now we will focus on the correct candle right here, which is the weekly candle. So I want to do this marking out previous week high. We took that liquidity from previous week high, and we now have previous week low. So we're having this impact news coming up, NFP, CPI, and some other high impact news coming up on the dollar, and you look forward to that. So right here, this what we have right here is a support level. You can actually see the candles look equal right there, right? So that is our support level, which is also in line with the previous week low. We go down to the daily time frame. This is the daily time frame, and we are likely looking at this old block that was formed from previous week to see if price is going to hold that, if it is going to hold the price or not. Go down to the forward time frame. Currently on the forward time frame, to me, I don't trust this. All right, so the reason why I don't trust that is because I did not see a favorable gap where it should react from. But when it comes to marking trend, we have higher high, we have higher low, and then we have higher high. Okay, that is the bullish trend right there. We have high, I think my mouse is running dead, and we have low. Okay, so this is a lower time frame structure trying to align with the higher time frame structure, which is this the daily time frame, which is this low, this high, this high. We have a breaker structure here, Then we have liquidity pool formed above the point of interest. Okay. Using the Fibonacci, my mouse is just misbehaving. From this low to this high, you can actually see price trade into the discount, which has a bad side inefficiency, a favorable gap, and that was responsible to take the high that are level from the higher time frame. Okay. So now we are watching EURUSD currently, and to me, I don't see myself trusting this because I do not see a favorable gap. If you look from previous structure that were formed, we have inefficiency right here, price trades into it, trade bullish, broke a structure, violated an area of supply, and we have a favorable gap and an order block right there, a demand zone, price trades into it, and then we have that another structural break. But me seeing how this kind of trades back into this favorable gap and went higher again, I am not trusting it going bullish because I cannot see a valid point of interest to trade because of there is no favorable gap, like favorable gap in line with an order block, because we have already filled up this. I thought I tracked something because I've already filled up this. It's not actually showing. Okay, so due to the fact I see we filled up this favorable gap and we trade higher, I am not confident enough to execute a trade from that point because it's not too clean for me, not clear, unlike this one. Alright, so I will be watching price to see what will happen if there will be a structural shift. So currently we have a battle between two opposing blocks, which is, I don't know why someone will be buying from here. To me, that is not clean because there's no favorable gap. Alright, so we're having a battle between this and this. Alright, so this supply zone is now created to counter the demand zone, to have this battle of war between themselves. So one of them have to win. So if I have to validate buying from this point of level, point of price, I need to see it break out of the supply zone. It needs to defeat the supply zone. Then we see how long it has to go. Alright, so you should also remember that we are still having that resistance from the 3 months favorable gap, but it has not yet confirmed going bearish. Okay, so we will just be watching price to see what will happen at this price level. Once this low gets violated, then I'll be watching to see how I will look for shorts, and we'll see it go for the discount price. Then once it gets to the discount price, we'll see if it wants to go higher. Alright, so that is what I have for EURUSD. And this week, the week is already ending, so the month of May ended has an indecision candle. It might end has an indecision candle because this trading activity is a stress. Alright, so don't know if it's going to form a reversal candle. Okay, so yes guys, I think that is all I see. We will watch the market and we'll see what will happen. So see you guys tomorrow. Take care and be safe.